In Los Angeles, recent wildfires have become one of the costliest natural disasters in world history, destroying entire neighborhoods near America's second largest city. The tragedy also exposing and accelerating another crisis in California, the increasing risk of natural disasters driven by climate change. It has made insurance harder to come by and premiums more costly. Ira Spitzer with this report.
Last month's devastating wildfires in Los Angeles destroyed over 18,000 structures, including these homes in the Altadena neighborhood. Estimates of the damages put the total cost at upwards of $50 billion.
This is up there as one of the largest events ever seen in U.S. history, or in world history for that matter.
Insurance firms are now on the hook for much of that rebuilding cost. And that's not good news for an industry that has already been in crisis in the U.S.'s most populous state. Concerned about the risk from increasingly destructive wildfires, two of California's largest home insurers stopped accepting new policies at all a couple years ago. And before last month's fires, the state's largest insurer, State Farm, dropped about 70% of its customers in LA's Pacific Palisades neighborhood, which suffered catastrophic damage. Many of those homeowners were forced to turn to a state-run insurance plan that has now run out of money due to the massive number of claims. California regulators just announced a $1 billion bailout for the plan, money that comes from the insurance companies that do business in the state. And experts say climate change is starting to have a major effect on those companies' risk calculations.
It has been a growing trend in the insurance business to start to take climate change into account as they try to figure out how to price their coverage.
From wildfires to hurricanes, the risk of damage from climate-related events is increasing, driving insurance premiums in places like California to record levels. Just last year, multiple California insurers raised their rates by over 20%, and 10% of the state's homeowners don't have any insurance at all.
A lot of people that try to model out this risk have looked at historical information and historical data. But the reality is that the frequency and the severity of these events has only been increasing. It's not only in wildfires, but also in floods and hurricanes and other types of perils.
What that means for California's future is an open question. The state has instituted temporary rules to stop companies from canceling coverage in the fire-affected areas, and also plans to address regulatory concerns to keep insurance firms from walking away. But the higher the chances that more homes end up like this, the more expensive that insurance is likely to be. Ira Spitzer, CNA, Los Angeles.